Hello, everyone. I hope everybody's great today. I'm going to come to you today with some information about taxes. But first, I want to thank you all for your responses when I asked you the question about me going live. And specifically those that said, hey, do it whenever you can do it. And I have decided that it'll be Sunday afternoons, maybe 2, 3, or 4 o'clock, because that's the best time for me. During the weeks are pretty hectic, and Sunday is kind of, a laid back afternoon, and we're going to do them then. I don't know when I'm going to start, but we're going to do the lives then. So, what I'm going to do now is I'm going to partially read and partially comment on an article that is concerning the Internal Revenue Service and auditing high income people. I got this article from the Epoch Times, which is a paper. I think they're more of a conservative paper, but the information in this article was a lot better than a lot of the other ones that I've seen. So let's go. Delinquent millionaires. IRS announces targeting high income Americans for tax evasion. The IRS says it plans to continue in pursuit of high income individuals evading taxes, as the agency officials announced that they have recovered over $38 million from delinquent cases against wealthy taxpayers in the past few months because of a boost in their funding. In a July statement, the IRS said that they are working to ensure that high-income taxpayers pay the taxes they owe. They say that before they got this money from the August 22 Inflation Reduction Act, which we'll talk about that a little bit later, lack of funding prevented them from keeping pace with the increasingly complicated set of tools that the wealthiest taxpayers use to hide their income and evade paying taxes. The IRS claims that it has recently identified roughly 100 high-income individuals who are living in Puerto Rico without real residency for the purpose of securing potential tax breaks. Also, they say that they're looking into taxpayers making use of the Washington Treaty with Malta to improperly claim tax exemptions. I've been to Malta, but I don't know anything about a treaty between Malta and the United States, which would let these taxpayers claim exemptions. So I have heard though of the Puerto Rico, and a lot of people talking about going to Puerto Rico so that they can take advantage of a lot of tax breaks, since evidently their tax is low to nothing. But if you're going to do that, that's fine. Just make sure that it's something legitimate. Also, if you're going to look into the Malta and Washington tax treaty, just make sure that you're dotting all of your I's and you're crossing all of your T's. So, and remember, the Inflation Reduction Act that was enacted it was August 2022, set aside $8 billion, with a B, $8 billion for the IRS over a period of 10 years, and it makes a difference that it's over a period of 10 years, so that they can boost enforcement as well as to improve operations and service. With that in mind, I think that it's a ruse to make people think that they're going to start auditing the wealthy people and that they're going to lay off of the poor and the middle class. I don't think they're going to do that. Let me tell you why I think that they're still going to be concentrating on the poor and the middle class. So I think that knowing that they've been under scrutiny, they have been under serious scrutiny for picking on the little people, and focusing on us, they rather than the wealthy people, then they started going about talking about how they're going to get the rich people. Now there's a group called TRAC. So in January, this group called TRAC, which is a nonprofit data research center in Syracuse University, they pointed out that the taxpayer class with unbelievably high audit rates, 5.5 times virtually everyone else, are low income wage earners taking the earned income credit. Yes, they're messing with people that are going for the earned income credit. The agency's rate of income tax audit per 1,000. Let me start that one over. The agency's rate of income tax audit per 1,000 earners stood at 12.7 for low income wage earners in 2022, but for everybody else, it was only 2.3%. That's crazy. Also, in 2021 a 2021 annual report to Congress, the National Taxpayers Advocate Aaron Collins pointed out that in 2019, more than half of the taxpayers that were audited in correspondence audits, that means audits in the mail, they only had a positive income of $50,000 or less. So they're spending a lot of time on people that are poor and middle class. Low income wage earners have historically been targeted, not because they, listen to this, not because they account for most of the tax underreporting, but because they are easy marks in the area when IRS increasingly relies on correspondence audit, yet doesn't have the resources to assist taxpayers to answer their questions. In other words, poor people and middle class people are the low hanging fruit. They can't afford the high powered attorneys and CPAs that larger companies and individuals that are rich can afford. Number one, to go and find all the tax deductions and credits that are available in the code. Those people pay people $50, $60, $70,000 a year to search through the code and find tax write-offs. I know of people who have gotten a write-off or credit for buying some farmland and having 40 cows on it. Just different things like that. There used to be credits for that. Every time there's new credits coming up, they have the CPAs and the attorneys that can go find those credits for them. Poor and middle class people and small home-based businesses and basically just small businesses, they don't have the capacity to do that. So they don't get the benefit of having all these tax credits. And, the IRS doesn't like to audit these larger companies and larger individuals because they have such sophisticated schemes that they put together for their taxes, and the IRS doesn't have a large enough pool of smart CPAs or attorneys to go after these people. So it's like David and Goliath. They're not going to go against. I remember when I was an IRS agent, I was a CPA. So when I went in, they tried to intimidate me, but they couldn't intimidate me because I was, basically, I had the ability to check out what they were doing. And a lot of times I found that they weren't doing correctly. But most companies don't know that. And I think they're going to continue to go after mom and pop businesses and individuals that are trying to start businesses. But that's why I'm here, to help you all. Anyway, the same organization, Track, they pointed out that the IRS audits of millionaire taxpayers have fallen over the last decade. In 2012, they audited 40,965 millionaires. But by 2020, the number fell to 7,108. That's all. So everybody else has gotten audited, the poor and middle class, and people that are getting the earned income credit, and that's just ridiculous. So the Inflation Reduction Act has faced criticism, which it should has, with some arguing that the bill will increase the IRS taxation focus on poor and middle class people. Before passing the bill, listen to this, before passing the bill in August, an amendment was proposed by a Republican senator stipulating that none of the $80 billion in funding that was set aside to the IRS could be used to audit taxpayers that made less than $400,000. This man was trying to say, you're getting this money, don't use it for the middle class people, don't use it for the poor people. If the people are making less than $400,000, don't bother them. But guess what? All 50 Democratic senators voted against this amendment. Pause and think about that. Also, Representative Kevin Brady of Texas estimated that the spending measure could potentially amount to 1.2 million taxpayer audits each year, of which more than 710,000 of them would be Americans making $75,000 or less. This money is coming into these people. You all need to get ready. I advocate for small businesses. I want everybody to have a small business so they can earn income, extra income, build a legacy, make sure they have money coming in, multiple streams of income. But you got to watch out for these people. And that's why you need to keep what you earn, protect what you earn, and grow what you earn. You need to learn to do that. And this is a plug for my upcoming seminar that I'm having in Atlanta. It's going to be August 19th. It's going to be basically an all-day seminar where you'll learn how to protect what you earn, keep what you earn, make sure that your books and records are in order, learn how to start a home-based business, learn how to make money in your sleep, The link for that should go out probably this coming Saturday. So check out the link for that. It's going to sell out. So make sure that you get your tickets early, because I want you to make sure that you are building a legacy, that you are not in pain because the IRS is taking all your money. Making sure that you get a chance to start a home based business and be one of those people that knows how to not get audited, or if you get audited, to beat an audit. So make sure you do that. And I'm going to come back with a couple of more videos probably before Saturday if I can. But this is Sherry Peel Jackson signing out.